Hi, how's it going, guys? This is Mufta, OFGBFX. How was last week, guys? How was your week? So we'll just jump straight right into it. Last week we had NFP non-farm payroll. That it changed the dynamic of the market a little bit last week, and there were a little bit surprises getting to the close of last week. The first one was Euro odd. That's the first one we'll be looking at. You could see throughout last week, we were after all these moves happened last week. I mean, if you want to see the overview of the market that we did, you could go back to the previous video and have an overview of how we saw this market at the beginning of the month. So first of all, go to the weekly. Earlier on in the month, we talked about this triangular pattern here, and we were talking about how a descending triangle here could be a bearish pattern. So we expected something like this last week, but not last week, earlier on last month. And I mean, this happened. There was a little bit of consolidation here. And there was a breakout. So this right here is what we call a failed pattern. And I remember Jack Schwager, is a very renowned writer, saying that a failed chart pattern is a signal unto itself. So you know this is a descending triangle, right? So with a descending triangle, you expect a bearish move. But as soon as the descending triangle fails, and what I mean by fail is that the triangle didn't play out the way it's supposed to play out and broke out on the other side rather. The descending triangle is a signal unto itself. So instantly I changed my bias as soon as there was a breakout on the other side, as soon as the pattern failed. So instead of being bearish now, I'm super bullish on this pair right now. And what is happening right here is just a retest of this of the triangle, a retest before practically a continuation to the top side of the triangle. So to cut the retest, I mean there are a couple of ways. So we use our Fibonacci tool to measure the likely retest area of the triangle. So if we measure it well, we should be getting somewhere around here. Usually, if you've been following our analysis for weeks now, you should know that I'm a very true believer in the 61.8 Fibonacci level. And not only that, I mean, you could see the back of the back line of the broken triangle could serve as a resistance also. Support. So basically, this is basically demand and supply style of trading. So this area serves as support. So let me go to the weekly. Let me break it out. Let me put it up a little bit. You'll see that this pair bounced off here last week. It bounced off here because of this supply demand zone right here. It bounced off on the daily. If you go back to the daily, you see what I'm talking about here. Bounced off up. So it's expected to continue to come down to the downside. So I mean, it's already pouring down. So guys, hopefully when this analysis is posted, you will see a little bit of retracement. So basically, this is what I'll be waiting for this week to happen. A retest, then a continuation to the upside. Basically, that's what I'm looking at to happen on the euro odd. I'm sorry for the quality of my presentation this week. Hopefully, you wouldn't find it as uneasy as it should be. So that was Euro AUD. Let's look at the NZD USD. The NZD USD has been selling from like last week, and I mean we've been following it. If you've been following the analysis, you can check the previous analysis to see the bigger picture. How we look for the bigger picture last week. So this pair will probably after this bullish price action, this is a whole correction, as you said, on the monthly. So when we go to the weekly time frame, we can easily measure the likely retracement level of this. So I mean, it's in a very good zone for buyers to come in. So I'll be waiting for a very, very good price action, bullish price action at this level to see what could happen to the top side. So you'll be watching this level very carefully. The NZD had a very good reversal zone, and expecting something like this shouldn't be a surprise to the top side before perhaps continue to the downside. And this is a very, very good risk to reward ratio. This would present very good risk to reward ratio trade. I mean, this is a very long one, but so this should be something like this. So I mean the reward, sorry, the risk and the reward, basically even more. So you basically be buying for a likely pullback. I mean your stop loss should be around here, and if your setup permits. So over here, I'll be waiting for further confirmation, further evidence that this pair would give me throughout the day. The day is still young. But if it breaks down past these levels, you're looking at a very good double bottom over here for the top side to happen. All right. That's the NZD USD, guys. Euro USD. Euro USD to the US dollar pairs, the major US dollar pairs seem to be at very pivotal levels. The Euro USD to seems to be at a very pivotal level. Let's breaking it down from the weekly. You could see that last week after the NFP, you could see the spike down, and this is a very good bottom. For us who know what double bottoms are, you should be having a good idea of what is likely to happen here. We all know double bottoms are reversal patterns. So, but this might present very good risk to reward ratio trade for your setup if you do trade this way. So you would be looking for. I would be waiting for it to come a little bit deeper into this zone before I get, I mean, a good risk to reward. You know, I always like, if you're following the way I analyze for a while, you know, I always like very high risk, high risk to reward, very low risk but high probability trades, basically. So I'm always looking for a very good high probability trade. So if this could further come in here a little bit into this reversal zone where I can put my stop loss around here, and my reward should be something around there. That would be very, very good. So this is more like a 1:3 risk to reward ratio for me. And that would be very, very good. But if you have the capital, your setup permits you to trade this way. But this is at a very pivotal zone, and we might see a reversal to the top side a little bit. So first of all, we're just looking at this. If this then gets here, then we reanalyze again to see if there might be something else that might happen. But for now, we're only focusing on this move to the top side on the Euro USD. And over here, you can see there's a structure, there's a broken structure here, which led to the double bottom. So hopefully when the European markets open, there'll be a lot more movement in the markets. And this is the Euro NZD. Euro NZD, to give you a little bit of overview of what we saw last week. It's in a range at the moment. On the weekly time frame, it's in a range, a very tight range. And last week, if you look at the last week video, you will see that we found a very good retracement, a very good reversal zone for this move here. So we are looking at it to come here. If you check out the last week video, you get the bigger view of what we're looking at. So I just urge you, go back to the last week's video, get the bigger picture, and come back to this video to further understand what we're talking about on the bigger time frame. So there was a reversal. So after the PRZ, the possible reversal zone here, what happened was price started a possible reversal zone around here that we just saw. Price broke out to the top side and might be doing a retest. We're doing a retest of that reversal zone because it didn't really shoot up to this level. So if what happens, what we'll be looking forward to do, what I'll be looking forward to see is for it to continue to the downside, because first of all, I have established my my bias on the bigger time frame. So go back to last week's video, understand the bias. So what this means is before you come into the market, before you trade, you need to have a point of view of how you want the market to look like. You want a perfect condition, not perfect, but you want to have a view, first of all, of how you think the market might play out. Then you play towards that view, and that is basically what I'm doing here. So from the overall analysis last week, my bias for the euro and New Zealand dollar is bullish. So for the market to play out the way I want to, I'll only be looking for bullish price action. So after this bullish move, if you didn't buy here, you would perhaps be waiting for a pullback, a retracement to the downside, and for a very good risk to reward to the top side. So, and one mistake new traders do is because I've established my point of view to be bullish. New traders, for example, because I say I want to buy, I'm waiting for price action to come here, and price action is here as we see. New traders would want to, okay, let me just sell, or let me sell for it to get here, then when it comes I buy. I mean, that's not how to trade. If you find yourself doing that, you should desist from it. it's not the right way to trade. You need to wait for your idea to play out in the market. So my idea of how this market will play out is for this to continue to the downside here before a bullish move to the top side. So basically, this whole move, this whole down move has nothing to do with me. I'm not going to do anything. I will just watch it play out. What actually has an interest, what would spark my interest is when it gets here, I'll be looking to get into a buy. And that is how you approach the market. So organize your view, have a view of how you think the market will play out, and sit and wait patiently for that to happen. On the other hand, this might continue up easily to this level. And when it gets here, further evidence might might present itself, and might be looking to short to the downside for a little bit of a while, a very short time. If we pull out Fibonacci level, you see that that is a very good Fibonacci retracement zone for this whole move to the top side. And how's the Euro NZD, guys? And sorry for the quality of my analysis this week. A little bit to the jam. So I'd love if you drop comments. I mean, ask questions in the comment section. I'm willing to answer. Tag people, repost. I mean, share for people you think might be useful to, and turn on the notifications so you don't miss anything. So that's the Euro New Zealand dollar, and that's the bias. That's the view for the week. The pound New Zealand dollar also. Last week, you would see, if you check the previous video, you would see the overall view, the bigger picture. First of all, that's how the analysis. You start from the bigger time frame, then you break it down. Because of time, I don't want to go back to what we did last week. So the bigger picture is telling you I'm bullish on this pair, and this, what is happening here at the moment what is happening here at the moment is a correction. So this pair was somewhere here last week. We talked about it, getting a retracement to the downside, and it's playing now. When NFP happened yesterday, last week, this happened, and hopefully this should continue to the downside here. A very good retracement level for the bulls. I mean, this is a very good bullish reversal zone. Excuse me. So this will basically be waiting for this to continue to the downside and break to the top. This might easily just continue to the top side, but like I said earlier on, you need to have a view yourself. So if my view doesn't play out, I don't chase the market. I don't follow it. I when I miss an opportunity, I just wait back, sit back, and I mean let the opportunity play out. There's no need to force any trades. Because you see yourself, when you are forcing trades, you are not very comfortable. I mean, when you say you are going to buy here, you end up buying here. You are not comfortable with the trade, and when you start getting uncomfortable, you should know you are not doing the right thing. I mean, we all do mistakes once in a while, but we have to keep it as little as possible. So yeah, this was like double bottom, and the weekly price action was telling us this pair is still very bullish. So yeah, a little correction of this move. and hopefully to continue to the upside for us. If you want to get a bigger picture of what's happening, go back to last week's analysis. Just check it out. Have a good look at it to give you the bias you're talking about. So for intraday guys, I mean, you'll be looking to continue this sell, but for big swing traders like us, yes. So that's the pound NZD, and I have a new addition this week: Euro Pound. The Euro Pound is one of my favorite pairs. I usually get setups on Euro Pound on occasions. So the Euro Pound is basically at a very, very low bottom. It broke the low, the most previous low, and that was around 2018, the 2018 low. It broke the 2018 low, and is currently at a very good bottom. Is at a demand zone basically, and you can call it support zone also. So I mean, giving us a double bottom, left bottom, right bottom, and you can see at the bottom there's already bullish price action. So there was this move to the upside first of all last week. So basically, what I'll be waiting for on this Euro Pound is to buy basically, because it's on the demand zone, right? So you've established a bias, so you want to be buying depending on my time frame that I trade. So for my time frame, for my kind of swing trading, that's what I'm waiting for. For me to get a very good risk to reward ratio, I will be looking at this playing out this way, coming back down to the downside, and giving me a very good risk to reward ratio. For at least 1 to 2 risk to reward ratio, very good probability trade for me to put my money. And the main reason why you need to get a stop loss in place is it puts you at bay. You need to have a point in the market where you say, I am wrong. When this market gets here, when this market continues down to this level, I can say, and I bought here and it gets here, I can comfortably say, okay, I'm wrong. I need to get out of this market. And that is the main reason why you should have, before you enter into a trade, you should predetermine your stop loss, the amount of risk you're going to put in the market, the stop loss, your exit level when you are in profit, your exit level when you are in losses. I mean, basic things like that should be predetermined when you are trading, and not to after you've bought or sold. You won't be able to effectively do that if you already have money on the line. And the last pair for today is the pound USD. The pound USD, you could see we've been following this pair for like weeks, right? And finally it broke down. If you want to get a bigger picture, go back to last week's analysis, and you have a bigger picture. You can see the pound USD you've been following for like weeks now, and I mean it's finally playing out. Broke out of the triangle. So if you weren't in at this level, you should be trying to get in at the downside. So if you missed this trade, you should be looking for perhaps a retracement to the top side for a very good level. Depending on the type of style you want to trade, you should wait for a retracement, a retest around here, um, to give a good risk to reward ratio. I see this pair getting to this level. Hopefully, all of that things being equal. So my bias for the pound USD is still very, very bearish. And we'll see how this plays out in the coming weeks. You could easily see the bearish candle. So I mean, look for retracement to the downside. Look for good retracement to the top side to get good probability trades here, good risk to reward ratios, and so what we're basically waiting for, this pair already broke out. You don't want to sell here because where's your stop loss be, right? How do you want to put your stop loss when you sell here? You have $1 million to put your stop loss here. If you're a retail trader and you're trading 5,000, 10, 15, 20,000, you should always look for good risk to reward ratios. So I'll practically be watching this pair very well. If I'd missed this trade, I'm watching it for a good retracement back to this top side. Something very good, something very, very positive, very non-doubtful to happen for me to get in at a good risk to reward ratio here for the sell to continue. Yes. And you as a card, guys, go back to last week's analysis. Like I said, when I'm in a position, I don't like I won't be trying to do further analysis for the week for it. Although when you are in a position, when you are in a trade already, you need to reanalyze. Always go back and see what might happen during the day, during the week. Try to see what might happen. So I don't try to do analysis for the public to see because I'm already in a position. When you have money on the line, you tend to lose objectivity, and there's a lot of mistake that can happen with that. So guys, make sure you check last week's analysis to understand. And kindly subscribe to the channel, like, and turn on the notification because from next week we'll be starting a podcast. We'll be talking to traders. We'll be talking to traders about trading. If you are new to trading, you definitely benefit from all what we'll start to do from next week onwards. We'll talk to traders that trade your way, traders that trade differently from you. You'll be able to learn from different traders with experience over the years, people who have knowledge in the market. So guys, subscribe to the channel and would have a very, very, very good year upcoming for us. All right, guys. Take care.